tastylive.com, see what we're all about. If you're already on the website and the platform, come over to the YouTube chat. Tell us what you're trading today, what you think of that weird close. Market bumped lower by about 5 or 6 points there, right as the market reaches 4 p.m. Eastern. But that's not really the talk of the town here, guys. The talk of the town is how good Dylan Radigan's skin looks. Dylan, do you think the market
Listen,
feels
I got
as
an
good
Italian
as you look?
skincare company for you. You're looking to make a couple of bucks. I got no conflict of interest. I have no financial interest. I'm just an advocate. So if you're looking for a recommendation, you just hit me on Twitter after the show. I'll point you in the right direction. Okay, Vecchio?
I could use it. I know that. Vecchio's still young enough.
You're gonna get a personal care package, Tony. I got you.
Thank you, brother. Appreciate it.
I will take one too. I see my future in both of you guys.
I'll tell you real quick. It's the rose petal face wash. Oh, so nice. And then it's like a GH. I don't even know. It's some sort of set of letters. It's related to a stem cell. And then it's like the stem cells of a baby Italian goat, I think. And then they put that. And
no animals were harmed in the making of this product.
No, the animals are fine at the end. It's okay.
Most certainly harmed.
Anyway,
for Dylan's youth serum.
Save it for later.
Tony, if you told me that Robinhood brought Dylan on the show to talk about rose petal moisturizer to kill attendance, I wouldn't be shocked at this point in time. But
you think this is some sort of a betrayal of the institution?
But my question is that tee-up is to say, like, markets here are pretty much closing at or near all-time highs. SPY certainly did. Triple Q certainly did. Dylan, what's the reason why we're finally, trudging through the muck here and poking into new all-time highs after several months of just churning sideways?
The end of global conflict as we know it. I mean, it's a changing. People can be as critical as they want to be, but at the end of the day, less war is good for peace, is good for markets. And I think that what you're seeing rhetorically and practically with the normalization of diplomatic relations between the United States and Russia, setting aside whatever other personal or political or diplomatic issues may be, I believe that normalizing relations with Russia is a step away from escalated global conflict, and that a step away from escalated global conflict is net positive for global economic activity, and I think the stock market reflects it.
Tony, do you think?
Wait, I'm going to give you that. I'm going to give you that, Dylan. But you got to go to the other side too. War is good for the market too, because 6 months ago, when we were full on and everybody was still doing their thing, then we're at market highs. It's just a cyclical rotation of things. That's really what it comes down to. I'm sorry, Chris. Go ahead.
But what does that mean? What does that mean? Cyclical rotation of things. I mean, that's a lot.
Well, I mean, here you saw it in Palantir today. That's been a stock that's been going nuts to the upside, and you get one. Hey, we're going to cut back by 8%. Big deal on defense by Trump today, and then you got Palantir sell off 10-15 handle and then rally back a little bit. I mean, you just go from oil-related stocks into consumer stocks now, into something else. There's a market everywhere all the time. You could spin it any way you want, but really what is going on in this market, you're right. It likes the slop. It likes the complacency. Nothing's changed. Everybody still has their rights. It's business as usual. Until it's not, and we don't know when that day comes. So until that day comes, you got to play it as business as usual.
Yeah, defense contractors today, there's a few different ETFs that track these kind of things, but SHIELD is one of them, SHLD. I suppose that's a good name for a defense contractor ETF. Down 1.23%. Palantir, you mentioned, Tony, was off by 10.08%, and they've had just a remarkable run. It's one of the few companies that have just exploded higher here in recent weeks. Including a name like Hims. Tony, I think this stock is really hurting your son because he keeps sending me messages early in the morning about how he needs Hims and Carvana to go down. This is more of a question about like market mechanics, I suppose. But when you see something that was trading in more of a, kind of a consolidative range or meandering around for a few months like a Hims or a Palantir, and then it goes exponential like it has over the past few weeks.
Yeah.
How do you approach that when the vol shoots up and you reflexively want to just sell the calls?
Yeah, Hims is it's acting like a short squeeze to me. I mean, these last 3-4 days, they don't end well, but they're certainly real painful on the way there. And if you have an existing position already that brings you some short delta, even if you started out as delta neutral, you got to buy the guts and sell the wings again, or change it to a call ratio spread if you still want to lean with a little bit of short delta, or change it to a diagonal spread, something that has defined risk to it. You just mentioned Hims. When you look at that front month vol with 2 days to go, it's around 180 or whatever, and back month vol is under 100. So there are intelligent trades to make in a stock like this that's gone parabolic to one side, but you're probably going to have to do it with some sort of defined risk. You still can have plenty of risk on, but defined risk. The hard part about this stock is if you have an existing trade. If you have an existing trade, one of the hardest things to do is close it and open something else, and I think that's what you have to do.
Yeah, sometimes you're just going to have to take the L.
Very hard thing for me to do. Very hard thing, I think, for anybody to do. New trader or old trader. We like to stick with things. I mean, because you want to be right. It's just human nature.
No, it is. We're all very loss averse. And, the studies on traders show that if we can gain $10 or lose 20, that's basically the break even point, right?
Yep.
But hey, like if I'd rather almost not lose 20 than to make 10. And,
earnings in 5 days in HIMS too, February 24th.
Yeah, February 24th, right around the corner. Carvana has earnings coming up today after the close, so hopefully we'll get that here. I haven't seen those yet.
It's 279. I don't think it's come out yet. Maybe it has. It's down $3 or $4. On a 30 some odd dollar expected move. I don't think Carvana's come out yet.
No, I don't think it's come out yet either. Dylan, you're our big Superglide fan. The Nasdaq's been holding up here and pushing higher. We're a few weeks removed from DeepSeek Monday and the transition from phase 1 to phase 2, but the semiconductors have roared back. Should we no longer be concerned about the chat CCP threat?
You can never not be concerned. I think it's less about are you concerned and what's going on with the semis. And I like to look at Meta, because I just think that of the AI names, Meta is actually the one that's the best positioned to exploit both the adoption, but also the second generation. Now, the interesting thing is you can see in that Meta chart that as NVIDIA's come back, Meta's come in a touch, whatever. I don't know if that's 2 days worth of action or whatever it is, but it's a reversal from the big post DeepSeek rally. So certainly if you look at the NVIDIA bump and the Meta reversal, it would suggest that anxiety about DeepSeek is, or anxiety that DeepSeek has torpedoed the CapEx value of the first phase of AI is less concerning today than it was a week ago. I also wonder the degree to which the Grok, whatever V3 Grok hype has benefited the sort of OG AI names as evidence of the fact that whatever DeepSeek may be an interesting carnival trick, but at the end of the day, it's the big multi-hundred billion trillion dollar infrastructure play that is dependent on the NVIDIA H100 supercluster that's going to ultimately set the agenda, and that the Grok action is where the action is. I still would rather own Meta than NVIDIA right now if it has an AI play.
So you bring up Grok 3, and I want to revisit that immediately here as one of my points of note for overtime today, because we were discussing this as well recently, and I think there needs to be some correction on my part, if only because the results that were shared the other day seem now perhaps less accurate given independent testers. Artificial Analysis, which is a great follow on X, analysis at the end is ANLYS. They are the firm that put out the DeepSeek V3 and the DeepSeek R1 testing model results that ultimately helped spark this, wave of confusion and fear back at the end of January. So where do they put Grok 3? These test results were released last night. Their Grok 3 reasoning beta is basically on par with ChatGPT o3, and their Grok 3 non-reasoning model is basically on par with O1 Mini. Why do these things matter? Why do we care about them? Well, it would mean Grok 3 is the best non-reasoning model in the market right now. And it would mean the Grok 3 reasoning model is perhaps the second best one, closer to O3 than DeepSeek R1 is. And it goes to show, I think, the bigger picture story there, Dylan, Tony, is that if you have the money and you can buy the infrastructure, you have the compute to build a successful model very, very quickly. Now, what comes after that, who knows? But Elon Musk just started doing this 18 months ago, and the only way he got there was by building this supercluster with 100,000 GPUs, soon it could be 200K. They're planning one that's 5 times bigger. That's fantastic. And Satya Nadella, the CEO of Microsoft, is out here today's session talking about what this means for the world of compute. When you have AI that can go out there and create its own agents, those agents are creating other programs and tasks for other agents to do, new software being written, the turtles all the way down. And you need scale and scale and scale and scale to build for that kind of automated future on a computational basis. So, if tech stocks are, benefiting, broadly speaking, from the AI trade, that's part and parcel to the price action we've seen. It's hard to doubt the narrative right now. I mean, Tony, you're not much of a narrative guy. You look at the prices and what the options market's telling you. Mm-hmm. What do you make of the price action this week, though, given the fact that it's the second half of February with OPEX around the corner?
Sure.
Do you find that the market should be a little bit stuck the way that it has been the past 2 days?
No, I didn't think it would be stuck the way it is. I thought we'd have a lot more back and forth action than we've had. I didn't think volatility would be near its lows. It is expiration week. It doesn't mean too much these days, but you and Tom have both talked about it being kind of a weakish week. But really, that's the last day, Thursday into Friday. So I'm not unhappy with what's going on, but I'm a little I'm glad that Tesla sold off it and we're able to buy a little bit of a dip in there. I'm glad that Meta sold off its highs. I can't stand Zuckerberg. I think if Tom can hate Elon, I can hate Zuckerberg. But I wanted to ask you both, because you were just talking about Grok and DeepSeek. Dylan, did you download DeepSeek?
No.
Okay, Chris,
I'm a terrible. I don't download anything. You know what I use? I use Bing.
I remember when I met you. You had like basically an analog phone. You had
I'm a late adopter, Tony. I'm a late adopter. I use Bing. Okay.
Okay, that's fine.
I use that. Just so you understand, my level of AI utilization is Bing, and I do use the Grok a little bit on the Twitter.
Yeah, but I don't think. But I think you're actually a perfect example for what I'm going to get to in a moment, and I'll tell you why. Because you wouldn't download DeepSeek, and Christopher, did you download DeepSeek?
Asterisk through Perplexity, right? You can run a jailbroken that's not the CCP version because it's the model sits in U.S. servers through Perplexity AI. So yes,
it's like
I have
a mirror of DeepSeek. You're saying it's a mirrored version.
Okay, yeah, so you went around the back end because you were worried about what was going on at DeepSeek to get DeepSeek. Great example of what I'm going to come up with too. Dylan Radigan, you have Twitter, you have X, correct? I talk to you all the time on X.
It is my predominant social media application as a consumer of information.
And a news source for you too, I would assume?
It is my primary news source.
It has Grok on there. Like
that's the only location where I use Grok.
That's the accessibility to it is what's going to make it so popular. Chris, you're looking at it from the back end about how good it is.
So you're saying distribution is the future of AI, not performance.
150%. And if you can do it from a quote unquote trusted source. I mean, if the man can have your social security number, he certainly can have your AI ability. Sure, why not? That's all you need, and that's what's going to make it good. Whether it's a 67 versus a 70 or a 60 versus a 70, you can get it. It's right there. You can use it. It's easy and it's trusted. End of story. It becomes number one.
That's a really interesting point. I mean, if you think about ChatGPT and then the wrapper that's Microsoft Copilot around it, the two of them cumulatively have about 150 million users per day. According to ChatGPT's deep research model, Twitter, as of last month, had 245 million active users worldwide per day. So, you talk about Grok 3 being able to bootstrap on all the information that's coming through X. That's a big pool of data that it can train on.
Yep, 100%.
Mostly slop, slop. I would argue that the content on X has become sloppier. The bots have died down a little bit in the past few weeks, which, maybe I miss them. But really, yeah, I mean, Grok has a chance to now it's a top model, though, already. It's sitting near the frontier. And is it perfect? No, just like ChatGPT is not perfect, nor is Claude 3.5 Sonnet or DeepSeek. But, we see that there's importance here to this compute. And so the DeepSeek gaps in these markets have closed. Dylan, now that they've closed, you were saying something at the end of, last call there, that the markets are liking what they're seeing in the geopolitical stage. I know there's probably a good deal of people out there saying, we're betraying Ukraine. The market doesn't seem to care about that. The market seems to have a bigger picture in mind right now. What is that big picture?
You're asking me, or
I'm
is that
asking
rhetorical, or is that?
No, I'm asking
the big
you.
Picture is
what is the big picture?
A global peace between China, Russia, and the United States, which I'm skeptical that it's going to happen. But that is the carrot that's being hung. The optimistic interpretation of this moment in history is that you have the three most powerful nuclear armed nations in the world posturing to reduce the collective nuclear threat. The cynical view, and that's a win for humanity, full stop,
Sure.
and it's certainly for the economy. The cynical view is any version of 100 interpretations of gamesmanship and manipulation and posturing, and because the other version is, the United States is attempting to manipulate Russia to create it. The United States is concerned about the proximity of Russia and China as an alliance relative to the United States. And the real enemy of the United States, or the real adversary of the United States, is China. It's not Russia. And that China is the weak third pawn in a battle between America and China. And so if Russia is the buddy of China because they have the physical, geographic incentive, and then also recent shared self-interest, if you will, relative to resources and oil and all that jazz, that it's a strategic move by the United States to bring Russia away from China and in the direction of the United States as a way to weaken China's position. That's the most credible, cynical interpretation of the maneuver, which does not necessarily eliminate the more optimistic view, which is move away from global nuclear holocaust. Now, here's the really cynical version of it, which is if Ukraine had nukes, they wouldn't be in this situation. North Korea would never be in this situation because they do have nukes. And now if you're a country that's not one of the big three, get your nukes out, because if you don't get your nukes out, no one's going to protect you. And Ukraine is a cautionary tale. So now everybody's got to get a nuke. Because
you get a nuke.
Yeah, because Ukraine gave up their nukes in exchange for protection. The protection wasn't there when they needed it, which proves that if you do one of these mamby-pamby deals where you give up your nukes, there ain't nobody, the cavalry's not coming when you need it. So you best get your nukes out when you can. And we're going to be all nuked up as a result. That's the most cynical interpretation.
I asked ChatGPT what kind of companies would benefit from Dylan's thesis of nuclear weapons proliferation, and ChatGPT tells me this is a highly sensitive and controversial topic with significant ethical, legal,
Grok answers anything.
Security implications. They're like, instead of focusing on companies that might benefit from proliferation, it's more constructive to consider the industries that would work towards non-proliferation, and provided me a list of those. So Grok 3 may be the answer for this, but Dylan, always thinking in the trader's perspective, what is the trade there? That is perhaps why for the past 2 days, I've seen some people in the chat saying, what do we do with LMT? Right? Lockheed Martin here. I have a hard time wrapping my head around this. Europe just does not have the capacity right now to field a standing army on its own. It does not have the weapons manufacturers to build up the armament that it needs on its own. And one of Trump's proposals is that the U.S. security umbrella will remain there if you buy American. That may not be how I would conduct policy. Dylan, Tony, maybe you guys would or would not the other way. But the fact matters, this is the world we're living in. And so I can't see how Germany, a deindustrialized Germany, is all of a sudden going to flip the switch and be able to fill the gap if it wants to maintain this front in Eastern Europe. So Tony, this is like catching a falling knife. It's 102.1 IVR in LMT, but it would be one of the companies that, yeah, the budget cuts are coming, yada, yada, yada. Maybe the worst is over.
How about this? How about this? I'm sorry. I've been talking to Grok over here. I got a new idea.
Oh, God, go ahead.
Crypto's a big thing. I heard about it. I don't know if you heard. It's going to be a thing.
It's been around the block.
AI apparently also a thing.
Yeah. What monster are you creating?
More conservative. How do I describe a political environment that's a little bit less that's evolving in a different way? I'll let everybody decide to have their adjectives. And that a prime beneficiary of the new political environment plus the AI plus the crypto is just nuclear power. Doesn't have to be nuclear weapons. But if there's ever a time to get long nuclear power derivative trades, because there's not the anti-nuke power political factions are less powerful, and electricity demand is, spiraling higher.
Yeah, I think that's kind of been the play even leading into this administration, hasn't it? I mean, that's something that
no. I mean, obviously, yes. It's just that whether the new administrative regime, the whole deregulation vibe, the whole let the dogs run free vibes, more easier permitting.
Yeah, I mean, it makes sense if we're not to get political here, but if we're making sense again, if we're making sense again, your argument makes sense. Like Lockheed Martin, markets aren't great in either one of those products. So both of them for me have been something that I haven't traded. I mean, I don't like trading bonds. I don't like trading commodities. So my world is a lot smaller than a lot of people's. I don't like trading currencies that much. I don't like the tick size in there. I don't like the small movement in there. I can't get a feel for the market. So I try to stay away. I try to stay away from those and stay more into the equity place. I mean, getting back to Palantir, I was reading that the CEO wants to sell 1.2 billion shares of stock or notional value of stock. I don't know for sure. I didn't read it well enough, but I mean, that's another reason for the stock to go lower. I read another article where only insiders were selling stock in PLTR, but PLTR hasn't had a downtick in 2 weeks. So is that information even good information, right? I mean, maybe it's good today, but it wasn't good for the last 2 weeks. So for me, you just really got to kind of trade what's there and in front of you. Going with the why of things makes it a lot harder for me. Chris, Ilya, Dylan, you do a much better job of that. I like to listen to what you have to say and then try to come up with something for that. I don't have an original idea. Like, I really don't. Like, the market gives me my ideas. Tom gives me my ideas. You guys give me my ideas, and I go from there, and I make a small assumption.
When you say this is what I've never understood when these big floor traders, these really big, big deal, big famous floor traders like yourself, kind of swagger into the room with your sort of false humility. You're like, what do I know? I don't know. I don't even know. I can't even tell my left shoe, my right shoe. I don't know. What do I know? I just do what's in front of me.
That's true.
I just trade what's there.
That's right. Yes.
So where I come from, upstate New York, they call that bullshit. Okay.
Okay.
See.
Okay.
Just to be clear.
So I like to be clear.
So when you say you trade what's in front of you, or you trade what's there, what's in front of you? What's in front of you going into tomorrow? What's there right now? What do you see that's there?
Sure. Like in SMCI, which was rallying big on Tuesday, I did a call ratio spread in there because it had upside call skew, which means further out of the money calls are extremely expensive relative to out of the money puts. So I bought an $18 wide call spread for free. And SMCI
because the deep out of the money call was so rich, it paid for everything.
Because the far
When you
out of the money
sold it.
calls, not deep in the money, far out of the money call, far out
Yeah,
of the money
far
call.
out of the money call.
Yep.
So you sold the way out of the money call because it was so rich that it paid for your whole operation.
Pretty much. And I had and the stock had to make new highs. It's closer to lows than highs. It had to go up to $130. The stock is, $60. It was $55 when I put it on. And by new highs, I mean highs in the last calendar year. I mean, I can't go back into the dawn of time. I mean, I only care about it's a 30-day window for me. That's the type of trade I make. That's the type of thing I would have done in Palantir. But to go back to my argument, I might have made that same trade a week or two ago in Palantir, and I'd be underwater today. Now, maybe after this 10-point move, I'd be back to even, but that's what I would do. I trade what's in front of me.
In terms of looking, but what I'm interested in was when your radar of looking for what's in front of you,
yep,
you're filtering for distortions or unusual pricing of implied volatility.
I'm looking for what volatility is doing, and then I'm trying to find a strategy that kind of piggybacks what it's doing. So volatility, if you got call skew, I'll give you another example in Tesla. Tesla last week was going straight down. Now, what usually happens to volatility in an equity, not in an ETF, in an equity, when it goes down? Volatility usually goes down with it because it goes down. In equities, volatility usually goes down, like in a Tesla or a Meta or a Netflix. Volatility expands on the way up because all the euphoria and all the, hey, I want to own this stock. People want to buy options. Volatility goes up on the way up in equities, and it goes up on the way down in ETFs like SPY and Qs because everybody's worried about the downside. They say, I have to have downside protection, so they bid up puts. Tesla, just a couple of days ago, you can see by that little spike up there about 3 or 4 days ago when it was making new lows, volatility actually started upticking. So I said to myself, okay, Tesla's gotten killed. It usually only goes higher. Volatility usually goes lower when the stock goes lower. It's now having a little bit of an uptick. I want to do a strategy with long delta in Tesla. So that's what I did on the follow page for all those reasons. It's exactly what I wrote in the description. Just see what, I don't know, but I'm just trading what's in front of me. Those are two examples of trading what's in front of me. Now, you somebody could understand or believe they have an assumption why Tesla turned around. Maybe somebody who follows charts, like a Tim Knight, might say, hey, it filled this gap, or this is a triple bottom, or something else like that. And that's how they get to their conclusion. It doesn't matter how you get to your conclusion, as long as you do something that's logical, that you believe in. And if you believe in the noise of, hey, going back to your idea of nuclear power, if you think that that's the reason why I do it, great. Let's look for a product or a stock that hasn't participated in it and look to buy that. Like that's the assumption that I want to go with. That's trading in front of me.
Okay.
Speaking of trading what's in front of you, Jim Cramer tweets out, Palantir will be back. Tony.
Okay, that's the end of Palantir as we know it. You can now, I don't want to get on him. I've actually met him. Dylan, you may not know this. When you were on CNBC, I was actually also ran to do a show in there with Options Action. I was the fourth alternate to your partners there.
They're lost, Tony. They're lost. They're too bad for them, sir.
Thank you.
Too bad for them.
Thank you. I appreciate it. I think they were better. They were more eloquent speakers than I was. So I think they won pretty easily.
Too bad for them.
But Jim's been having a hard run lately when he starts doing these things, when he puts it out there like this. And he really is the type of guy that likes to, buy high and sell higher. You know what I mean? Kind of thing. And when you get a turnaround on a stock like Palantir, it'll be really interesting to see how it behaves in the next 3 or 4 days. If it doesn't immediately bounce back, you could have seen the top in Palantir, at least the velocity to the move in Palantir to the upside. It may go sideways for quite some time, but the upside or that euphoria that we had is over if it doesn't regain its highs.
Yeah, Kramer's a big Eagles fan. He said the Eagles are going to win. The Eagles won. That's kind of thrown my whole, is the Kramer curse broken? Yeah. Right? Is he no longer inverse Kramer? What do I do here? So, I don't know what to do with that. But yeah, it is a, this is kind of like a top piercing moment. And from that technician perspective, just a word of caution. We saw this recently, right? That's an outside engulfing bar right at the high, which means it's a key reversal. That does signal a top. It's really difficult to get bulled up into the new highs here at the 72.8 IVR, right? We may be looking at a bunch of chop here. And it comes on the back of that defense spending news. A new House Appropriations bill is coming around the corner. We have some changes in where the money's going to be flowing, but it looks like $4.5 trillion of new debt. Dylan, is this, I guess, speaks to the Doge initiative. I'm watching and following the trackers. Polymarket actually right now is running a Doge tracker, which a Doge savings tracker, which is fairly useful if you want to cut through the noise of everything going on, right? Forget all the tweets. Right now, $55 billion, according to Polymarket, from the math that they've been doing behind the scenes. $55 billion in savings is not a lot compared to $4.5 trillion of debt. Should we not be worried about the government spending stopping anytime soon? That's supposed to be a deflationary impulse to markets, Mr. Radigan?
Try that again. Try that one more time.
Government spending looks like it's going to continue. Only $55 billion in savings from Doge, according to Polymarket thus far. And they're tracking this behind the scenes, looking through all the data that's being produced, because, of course, there are betting markets around it.
Would you rather not have the $55 billion and just have the spending?
So this is the conversation I keep getting back and forth with Victor, and I think we're talking past each other on this. I, as a trader, only care about this through the lens of, is the government spending more money or less money moving forward? Because if they're spending more money, that tends to boost asset prices. And if they're going to be spending a little bit of less money, that could bring down asset prices.
Fair enough. But would you answer my question?
No. So right now, Doge, it looks like it's not saving a lot of money because it's $55 billion against $4.5 trillion of new debt. So like that's the government's going to spend still. This is, I think actually Alex Karp, Palantir said it today. We should we shouldn't want our taxpayer dollars going to waste. Who's for wasting our own money? What is that about? What? No, we should all want an efficient government. But
so I'll give you the problem that they're going to run into. Okay. And it's currencies. And again, I don't understand them that well, and you understand them a lot better than me. So help me here. Maybe I have it wrong. Maybe I have it right. When Trump first did this in his first presidency, you had a dollar that wasn't as strong as it is right now. Like the dollar is extremely strong right now. So you were able to kind of offset a little bit of inflation with such a strong dollar. I don't think you're going to be able to keep the dollar higher the way it is now. And you're going to have the spending, and that's what you're going to get to see a little bit more inflation. Do I have that correct? Like, does that make sense? I mean, I think that's the canary in the coal mine, that he doesn't have the market in the currencies that he had in the very beginning of his first 4 years for the policies that he might use if they're exactly the same this 4 years.
Right. And like back then, the Federal Reserve was already tilting into cutting. And so they're cutting, and then the dollar's weakening. So while he's, raising tariffs, is it really hurting corporate earnings? No, because, like 61% of S&P 500 revenues come from abroad for the Mag 7 companies. And so a weaker dollar helps them. Right. And so you don't see a stock market that falls down. But at this juncture, right, the dollar is actually very, very strong. Right. And if we're going to have these tariffs, the Fed is not cutting rates this time, which is a huge difference, right? And like the trajectory of which way interest rates are going from the Fed is a big determining factor. Right. And if all these other countries are going to see weaker economies because they're now shut off from the U.S. consumer to an extent, that means the dollar probably stays strong. Right. I actually don't know how it's going to work out, but that's what the Fed minute said today. But yeah, I mean, Tony, like as a trader, I have my own political personal beliefs about what should be cut, what shouldn't be cut. Macro level, is the government still spending a lot of money? That's the only answer we need. And the
government always spends money. That's what moves the world.
But I think that's the point, right? Like we've been told.
But we've been worrying about the budget for 50 years.
And it never comes home to roost.
Never comes home to roost. So why are we worrying about it now?
Exactly. Anybody who ever talks about the budget is to me somebody who's not serious.
Yeah, I agree, 100%.
You only talk about the budget when it's politically convenient for you in that moment. And when it's not politically convenient, you don't talk about it, because budgets are irrelevant in the United States, utterly and absolutely, which is why there's no reason to reconcile tax revenue with expenditures. It's the whole thing is a manipulation that is a way to extract taxation from the poorest and the middle class and the upper middle class, even the W-2 class, I'll call them. And in the meantime, create massive tax giveaways to the capital gains class. Regardless, the budget, and the reason the budget doesn't matter is because the dollar is a reserve currency. And so the entire thing is an illusion up until the currency ultimately takes a hit, which is an abstract future moment, which is a derivative of not of our own currency, but of an alternative emerging, which would require geopolitical events that are unimaginable at this time.
Yeah. I mean, I think that's kind of right. Like, these things don't really matter for the market is where I'm landing right now. Through the Biden years, when we had these continuing resolutions, it just meant that spending continued along its current track. So the market said, okay, the government's still going to be pumping a lot of money, no problem for us. And that's what it looks like right now. So, as someone who, and we've talked before, Dylan, like, oh, if we have significant spending cuts, then is that something that could help with bonds? Well, if there's less government spending, that's less growth. So that takes the growth premium out of the curve, right? That could be good for bonds. So we got to keep an eye on this story if we want to be directionally long bonds. I just don't see the narrative pulling together the way that would justify having a trade predicated on that possibility of an outcome right now. That bill will apparently get a House vote tomorrow, so we should be keeping an eye on that. I suppose somewhat tangentially here, guys, what's going on with Bitcoin and crypto generally speaking? Tony, this has gone nowhere for weeks. Usually we think about like Bitcoin being the high beta NASDAQ. What do you make of this?
Yeah, nowhere fast. And I think Tom mentioned it, how coin over the last couple of days hasn't really participated in the same realm that Bitcoin has. Like, coin's actually been even weaker than Bitcoin has. Bitcoin going nowhere, coin kind of going to the low end of its range. I think last time we were together, I mentioned to you how I thought Bitcoin had seen its shining moment for this short period of time here. The next 3, 6, maybe year. I think all of the ETFs, I think all of the noise from the administration about how good cryptocurrency is going to be and Bitcoin and everything else that they're embracing it. It seems like when they really talk about these things, it does not make new highs or have the boom that, like, it almost seems like a pump and dump environment to me. And I think Bitcoin's going to get a little bit weaker. So I don't know about coin itself, the stock, but Bitcoin, MSTR, I think they got a little bit of rough sales to go for the next 3 to 6 months at least.
Why do you think that?
Because again, Dylan, I'll trade what's in front of me. Give me the environment for Bitcoin. It's phenomenal. I mean, better these past 3-4 months with this administration than it was the last 3 or 4 years with the last administration, right? I mean,
best of all time.
That's my news for you. That's my if it's all out already and everybody talks about it every day, it's too old, it's too long in the tooth. I look at it as the play is done. I think the velocity to the upside is done in Bitcoin for the short period of time. I'm not putting a line in the sand and saying this is done. I own some Bitcoin myself. I don't own as much as I have in the past. I've lightened up, but I think it's too much good news. It's just too much good news. The market likes a little bit of a wall of worry. too much good news here in Bitcoin. Too much
Would
good
you
news.
go with MSTR puts or some sort of negative directional trade on MSTR, or you just get out of the way?
I don't have a position in MSTR. Thankfully, the markets are way too wide in there. I would have gotten killed over the last year.
Oh, yeah, that's MSTR is a tough thing to trade right
Yep.
now. But outside of MSTR as a Bitcoin name or crypto name, generally speaking, I can't help but notice that these intermediaries, like if you want Bitcoin right now and you don't want to have, your own wallet, you could just buy iBit.
Yeah.
Why even go into coin? Why even go to get a proxy like Riot, for example? So when crypto's going up, these things are going up too, but not as much. And when we're moving sideways to lower in BTC and ETH, these things are falling a little bit harder. I don't have any positions in coin, Riot, any of MicroStrategy, soon to be just called Strategy. But I don't think these are great vehicles to, quite frankly, trade if I'm looking for Bitcoin exposure. I would just go to the Bitcoin itself. iBit is right there. It's highly liquid. There's Bitcoin futures. There's Tasty Crypto, right? So many options.
Yeah, you're right.
MicroStrategy also, just one last thing, like this Bitcoin yield play that he's doing. Yeah, if the market wants to keep giving him, like letting him short $1 to buy 3 back, like for his shareholders, he has to do that every day of the week. But like, is that if you want the Bitcoin exposure, just trade the crypto itself. Don't mess with Michael Saylor.
I agree with you. I agree with you there, 100%. 100%.
Yeah, there are better ways to skin that cat. So, guys, we look at this market here as we go into the final 15 minutes. Mostly a green day, not necessarily in the bigger names in the market, but a lot of solid distribution here across the board. When we take a look at the various sector performance, we like to say we track 25 here on overtime. Not that many were in the red here today. Those that were in the red, 1, 2, 3, 4, 5. We'll call it 10 in the red, 1 unchanged, and that leaves 14 on the board as in the green. Top performer, healthcare, XLV. And XLV. And
another product that's a tough one for me. I mean,
right. And the big name in there is UNH. So I suppose that's the place you could look. They announced potential for layoffs, job cuts. People tend to like when companies spend less money on things. Tony, please don't get any ideas about me or Dylan in upcoming reviews. What do you think about UNH? Obviously, it's been in the news a lot. It still has sustained higher volatility. It feels like a Boeing market from last year with all the negative headlines. But again, how are you seeing this market in front of you, given that it's the largest name in, say, the Dow?
Yeah, I've traded UNH from time to time. It has earnings coming out in April, I think the middle of April. Some of the out-of-the-money calls and puts markets get a little bit wide there. It's a $500 stock, so I'm always kind of looking for a defined risk trade. So if I could sell a little bit, I like to sell UNH put spreads as just as a small play more than selling call spreads at this juncture. I don't know. To me, UNH is a fringe player at best, but a nice wide put spread. They trade kind of by appointment. You got to go $10, $20 wide. You can get about $3 at around the 20-ish delta. If you look at like March or April options, I would probably stay away from April because of earnings and stay in March with 30 days to go. So for me, I'm a little bit of and not because the stock is up $10 today, because the stock has gone down yesterday and the day before that actually gapped down pretty good. But I would look to sell put spreads on a down move in UNH. I think it's probably seen its worst for the time being.
Yeah, the market's in a bunch of support, and I stand corrected. I didn't recognize Goldman Sachs' recent game. They have now become the largest component of the Dow Jones, which banks are on an absolute fire here. BKX, the KBW Bank Index, is just a stone throws away from a new all-time high. XLF is basically already there right now. I mean, Dylan, is this the era of deregulation? Is that what this is all about? Are banks just
no, I mean, yes, it's about deregulation, but it's not what it's all about. I think it's all about an era of or a moment, I should say, of optimism for economic activity that is supported by activity in technology, activity in energy, activity. You're getting all the deregulation creates more activity in energy, creates more velocity in technology. It creates more velocity in real estate. It creates more velocity in insurance. And all of those things create, and then you have the deregulation that then supports the actual velocity in finance. And so I think it's too simplistic to say, oh, well, there's more leverage coming into the financial markets, and because there's more leverage coming into the financial markets, the banks are going higher. I think that the banks going higher is a broader sentiment to the overall sense of expedited permitting and a heightened level of economic activity that transcends the banking sector itself. And the KRE has a nice thing to slap up in front of us, because I do think that the real estate markets in general are among the areas of the world that will benefit from a real estate developer president who's advocating for expedited permitting and less bureaucracy.
Yeah, you mentioned that there's permitting getting out of the way. There was something big that happened yesterday. Again, if you're a nerd like me and pay attention to this stuff, the White House decided to take a step back from an administrative ruling related to the CEQ framework for implementing NEPA. NEPA is the framework that everyone loves to hate if you're a developer. It was the regulations first granted by Jimmy Carter in 1977. It is basically the maximum pressure that the administration can achieve in moving forward with permitting reform without going through an act of Congress. So if we think about various projects that have struggled to get off the ground in recent years, if they're data centers, if they're new power facilities, if it's permitting for building out the electrical grid, forget nuclear or natural gas, but actual transmission lines, some of that stuff now can move forward a little bit more quickly, which, again, depending upon where you sit, you may like, you may hate, but that is now the world we're living in here. So, guys, I guess the question is, what are we doing in the second half of this week? We have Thursday, we have Friday coming up around the corner. We have OPEX coming up right here, Tony. Markets are a little bit softer here after hours, 61.55 in ES. How are you approaching the second half of this shortened holiday week?
Yeah, Carvana came out down at expected move, down around $30. I don't think that's going to move the market that much here. The broader market, what you're talking about here.
Your son's going to be very happy, though.
Is he? That's right. You said he needed it lower. He neted Carvana, and what was the other one? Did you say Palantir also?
Hims. He said he needed Carvana at zero to break even. So
right. He's got a little way to go.
A little bit more.
Volatility seems low. /VX under $17. Every time we have a downtick in the market, it doesn't lift its head up. If volatility doesn't lift its head up, again, Dylan, trading what's in front of me. If volatility doesn't lift its head up, then you can't have any extended down move. I would key on /VX. I like watching /VX. I like watching /VX when it goes higher and the market is going lower and then it stops. It gives you about an hour usually before the market kind of turns around and gives you a little bit of a play to the upside, or if you're looking to nibble on some stock that's gotten beaten up that you've kind of missed in the past. So for me, I think for the rest of the week, it looks like it's going to, it's setting up. I think the public call, which Sadov would call me right now, is to say more of the same. Nothing's on the horizon. I'm going to say volatility is a little bit lower. You might even be surprised with a little bit of an upward move here in the market for the expiration that usually goes to the downside.
It feels like everyone came into this week expecting some semblance of softness, even me. Like, I'm going to stay long, but I'm fully aware that this is a week where things could go sideways. You don't really trade the commodities much. Do you trade any of the individual names like FCX or
SPX?
FCX or like a Freeport McMoRan or like a BHP?
No, I haven't traded Freeport since I was on the floor of the CBOE. Got to go back to about 1986 to 93 or so.
That's a few years ago.
It's a few years ago. Yes.
Yeah, time is moving forward here quickly, and
flies.
Like that. Yeah,
you had stocks like Netflix that's been a leader in the market here. Trade down to 1,025. earlier today. It's back up to 1,040 and change, actually up on the day. Meta stayed a little bit weaker. Apple's kind of been a non-event here. But even when these stocks were going lower on yesterday and today, the market chugged along like the rest of the market put it on its back. I don't see there's nothing on the horizon that I see that's going to shake anything right now. Not this week.
Yeah, equal weighted S&P leads the pack today, outperforming SPY. Dylan, you and me are more of the commodity-centric folks in this room here. What do you think of this move?
Yeah, my thing is I look at the Russia peace play. I mean, I say that somewhat tongue-in-cheek, I guess, but I do have to wonder about an oil short, and I do have to wonder about a Dubai long position. I still just think you go back to, we've been jabbering for a few months about the Russian, peace trade. And Dubai being the mega winner, which the chart probably already has it. India being the mega loser, the chart looks like it probably has it. If anything, on the buy the rumor, sell the news, maybe you're actually buying India here and selling Dubai after all this obvious anticipation thereof. I do wonder if you're getting short oil, though.
Yeah, Tony, we've had a thesis here for the past few months since the election that in a world where there is an end to the Russia-Ukraine war, the neutral intermediary states that have served as finance hubs over the past years would actually see expedited growth, because all of this money that's been trapped in Europe, thanks to the sanctions, is absolutely going to leave European shores once it's frozen. Russians aren't going to trust these European governments to not lock their funds ever again. Right. So where's the money going to go? It's going to go to the places like Turkey, right? Istanbul. It's going to go to the UAE, Dubai. And then on the flip side, the countries that have made off really well because they've been intermediaries for the trade as a Russian pass-through, Russia's no longer going to need them as a pass-through. So India would be the flip side of this, and their equity market actually has been hurt pretty badly since the elections over the past few weeks. They're up a touch here today, 0.38%, but the ETF is down from 54 to about 49.75 now. So we'll call it a 10% move. And we're seeing things like that play out. So consistent with that, we're trying to figure out then what happens with oil, because if the sanctions are gone and all the supply is coming back into the market, does it mean that the market is going to see all the supply being sold at market prices now, as opposed to, say, at $50 a barrel? Or does it mean that there's way much oversupply coming in and oil is going to drop down into a midpoint between the shadow fleets and the real ones? It's not your way of talking about the market, but this is like a theme that we've been talking through here for like the past 4 months.
No, but I like it to go back to the whole commodity and currency theme that we gave, that maybe these tariffs aren't going to have the best effect as they had 4 years ago when he first kind of in his first administration, when he mentioned it, because the dollar is where it is. If you get oil lower, that's money straight to the consumer's pocket every week. Because listen, there's no better way than everybody gets in their car. This is America. We all drive everywhere. If it costs you $25 a week instead of $50 a week, that's $25 straight to your pocket every week. That's $100 a month. If you can get oil lower, as he has touted many times in the past, that could be a little bit of a boom for not only him, but policies that he projects. Again, just playing devil's advocate here. I would love to see oil lower just as a consumer. I think everybody wants to see any commodity that we use lower. Nat gas, I got to heat my pool this year. I don't want to see nat gas where it is right now. I mean, everybody's selfish in their own ways.
I would prefer to, yes, they just refilled my oil tank today, but thankfully I was able to lock in the price 2 weeks ago for today's delivery. So I avoided this big uptick here. That feels pretty good. You mentioned gas prices. Gas prices have been stable. Everyone wants lower gas prices. We've been kind of just trading around the RBH5 contract. Unfortunately, not going to find an options market here. But in terms of just an indicator, if we think about inflation trades, which way the bond market's going to move, gas prices have been stable. They're sitting right at $3.164 nationwide. A month ago, they were $3.12. A year ago, they were $3.279 for regular. That's according to AAA. So they've been stable, right? Would we like them lower? Of course. But they have been stable here. So that is something that is maybe helping bonds. Tony, while we wrap this up, you and I found ourselves on opposite ends of gold recently. I've been staying long. I know that you saw a move higher and sold some calls. it feels like we've both been right to an extent because the market hasn't.
No, you win. You win. You win.
Well, I mean, I was gonna say like you've been like selling some upside here, and the market hasn't done anything in like 5 or 6 days. So like, how are you approaching this now?
It's bullshit. I'll tell you what it is. It's bullshit. They're just making me feel like I sold the top and I can hang in here, which I have hung in there right now. I'm still down a couple of dollars on my trade, but I feel good, which means I'm about to get my keister handed to me here in the coming days. I would love to see gold lower because I have a short position in gold.
That's it, Dylan. We're replacing the U.S. dollar with Bitcoin and gold. Are you getting on board?
I moved to Italy.
All right. Well, with that, overtime is out of
euros.
Time. But you still get paid in U.S. dollars. You know, that's very smart, sir. Yeah, right. Yeah, you moved to a foreign country where the currency's weakening. You're good, you. You're good, you. Overtime's out of time for this Wednesday, February 19th, 2025. We'll be back, of course, after this with a video on demand of macro money. I'm on later today with Victor Jones for the Price of Truth in about an hour, so be sure to come back then. So for our star fill-in, Tony Batista in Chicago, and our usual friend, Dylan Radigan in Milan, I've been your mediocre host, Chris Vecchio in New York. We'll see you soon. Good luck trading.
Thank you so much for having me.
Thanks, Tony.
What a year it has been. 2024 has obviously been a year of many, many headlines, tons of market volatility, explosive moves for a whole host of financial markets. And it now winds up on a quiet week with not much macro to speak of and a holiday in the middle for most global markets. So what we're going to do here on Macro Money is look ahead to what is coming for 2025. I'm Ilya Spivak, head of global macro here at tastylive. And what we're going to do here is first, we will review how the year has progressed so far. Take a look at some almost over statistics for market performance, and then see how things begin to look as we enter the next calendar year. So this is the performance year to date. This is December the 23rd that we are looking at this 2024. So not quite the full year, but almost certainly, and comparing it to 2023. So we can see stocks on the whole had another year and a year of similar performance in 2023 versus 2024, looking at the S&P 500. NASDAQ, for all of everybody's screaming and stomping about its outperformance, it's actually done less well this year than last, though, of course, still a very impressive rise of nearly 28%. Risk sentiment at the other end of the spectrum getting a big boost, looking at Bitcoin up 120% as compared with the prior year's 157 almost. So a bit of a slowdown there, but certainly a dramatic increase again. And that speaking to the risk appetite on display in stock markets, but of course amplified by a less liquid speculative assets volatility profile. The interesting thing here happening in the meat of the table, though, so we can see yields basically unchanged at the front end, but a touch higher on a year when the Fed is actually cutting interest rates. The 2-year up 2.3% on last year. That's most likely because, of course, speculation for rate cuts was already well underway toward the end of last year. And this year we got just about the rate cuts we were expecting. So yields are even a touch higher. The 10-year showing a much more significant rise. So rates at the longer end of the curve, steeply higher by comparison, 18.8% almost 19%. Curiously, in that environment, the dollar is stronger. Euro down 5.7%. The yen, the most interest rate sensitive of the bunch, down 10.4%, even as the Bank of Japan started raising rates, the only major central bank to do so. And even stranger still, against an environment where yields are higher and the dollar is stronger, gold up 26.8, almost 27%. This is an asset that hates a stronger dollar, hates higher yields because it is a natural foil for fiat currency, and it yields nothing. So when interest rates go up, gold is typically on the receiving end of selling pressure. Not this year, though. There's an interesting recharging here happening, and the mix of assets here seemingly telling us an interesting story. Crude oil, before we go on here, down for the second consecutive year, albeit less so, and that's despite ongoing geopolitical stress. This telling us that perhaps that geopolitical stress, not much of a disruptor for crude oil markets beyond general media headlines. And so the implications probably limited now that geopolitical risk seems biased to be more contained going into 2025 versus less at the beginning of the previous year. The situation in the Middle East, the situation in the Russia-Ukraine theater seemingly not inspiring any kind of concern for crude oil, and it's marching to the beat of its own drum, and that beat is leading it a touch lower. But the story in stocks, coupled with the story in rates, coupled with the story in currencies and gold, tells an interesting tale. It tells a story of a robust U.S. economy, which despite Fed rate cuts has driven up yields because economic activity has demanded that rates be higher, especially down at the longer end of the curve. The dollar has continued to benefit from those higher yields as its yield profile against other currencies has looked more attractive. And gold has seemingly found a reason to go up, disconnected from geopolitics, because, of course, if it was a haven and if it was behaving as one, it would show up in crude oil gains. That, of course, the chief geopolitical risk on the board this year. And clearly, if oil doesn't care, why should gold? And indeed, gold is up with stock markets. Not much of a haven then. But gold seems to have found its support in the situation happening in China. They've bought a ton for their reserve account. They have resumed buying in November after a pause from April. And that's been an important reason why gold has managed to hold up, even as the dollar has strengthened, even as yields have gone up. But that increase in yields and that stronger dollar with stronger stocks seems to speak to the very impressive performance of the U.S. economy. As we look here, we can see as of December, the U.S. economy raging higher. The performance here being estimated by PMI numbers. They're more timely than GDP. We can see here that toward the end of the year, the composite index, which takes in both manufacturing and services, it's moving aggressively to the top right side of the chart. As a matter of fact, that is the fastest growth that we have seen in the U.S. since March of 2022. So a very significant acceleration here as ever. These PMI numbers work around a center line of 50 where that's neutral. Above 50 is growth, below 50 is contraction. Manufacturing, we can see, is still in contraction, albeit at a modest speed. The further you go under 50, the faster the contraction. The further you go above 50, the faster the growth. So we can see a very buoyant service sector is pulling the U.S. economy higher, and slight contraction in manufacturing is not holding it back. That ostensibly helps to explain how you get very strong stock markets, you get higher yields and a stronger dollar, even as the Fed cuts rates. But when we look at the situation globally, we find something much more circumspect. Take a look from the beginning of this year for the global PMI numbers that include the US, of course, but also the other economies. And what we find is we haven't done a whole lot. The composite index here, only very little change. There was a pop in the first half of the year. That pop has since fizzled. And so the pace of economic growth is just about where we started the year. It has seemingly stopped improving. And that's because the global service sector has taken quite a few steps back since the middle of the year. And manufacturing, although it was much worse earlier than it is now, it seemingly has returned back to the neutral reading of 50. It nevertheless remains downbeat the world over. So what's going on here? Well, we see here, of course, that the U.S. is mainly powered by its service sector, and we know that most of U.S. imports, that is, from the world at large, are on the good side. Services are mainly furnished by domestic firms. So a lot of this boom is staying inside the U.S. and not spilling over, even to very close proximity, very integrated economies like Canada. And so this is why the global picture looks much more anemic than the U.S. one. Now, global GDP growth is mainly dependent on three core economies. The U.S. is, of course, the biggest one. Then there is the Eurozone and China. We can see here that the remaining 42%, to those three economies, 58%, are mainly vendors that depend on demand from the former three. So think Canada and the U.S. or Mexico and the U.S. Think Southeast Asia or the commodity exporting countries in South America, Australia as well, New Zealand as well, and China. Think Central Europe, Nordic Europe as vendors for the Eurozone. And you can see that these three economies are really the linchpins of where growth comes from. And we've already seen that the U.S. is very strong. The situation in the Eurozone is much more sobering, as we can see. The regional economy shrinking for the past 2 months, the composite index sub 50, even as services rebound in December. The situation in manufacturing, as it is globally, anemic, but the rebound that we saw in the first half of the year, arguably a big reason why this global number started to pop by mid-year, that has fallen away. And now the economy is again flirting with recession-like conditions. The situation in China is one of standstill. These numbers run through November. We haven't seen December's figures yet, but as we can see, these are official figures here. This is China's reopening from zero COVID restrictions. We get a brief pop in service sector and composite demand, the pop in manufacturing much more modest. And since then, after just basically a quarter of an initial upswing, the economy drops and settles into standstill. These numbers are barely removed from the center line at 50. So in one major node outside of the US, we've gone basically nowhere in 6 quarters. Indeed, the economy is in deflation mode, where real GDP is outpacing nominal, suggesting that there is virtually no demand to speak of. And in the other, we've returned to what can become recession-like dynamics. Once again, after this shallow recession-like dip late last year. So the world is operating on what is essentially one leg of the stool. It is the US that is powering global growth, and there is no plan B as we go into 2025. Where this becomes a challenge is in the US, inflation has stopped cooling and is starting to tick up a little bit. The most recent numbers for the Fed's favorite inflation gauge, the PCE index, showing that we're holding at 2.8% on core, and the headline number even moving higher, albeit a little bit less than expected, to 2.4%. Now, this is, as ever, we can see having to do with the service sector being as strong as it is. Core services where that inflation lives. Core goods still slightly negative in their contribution to price, which of course tells you why the US boom isn't spilling over, as we've just mentioned. And housing still largely locked up by what the Fed has done with hiking rates as sharply as it did in 2022. So that bit is waiting for the central bank to cut rates more and perhaps unlock this market. But as we start to get a tick up in core inflation, and indeed at 2.8%, what this means is essentially we have not seen disinflation in the US of any kind since June. June was the last time that we ticked down on core year-on-year PCE. Since then, for the subsequent 5 months, inflation has not fallen. And so what we understandably have seen as a response is the Fed has become more hawkish. The markets have called for it, and the Fed has responded. We can see here that where the policy curve looked like it was going in September has been adjusted substantially to a more hawkish setting, even as the Fed began to cut a little bit in the waning quarter of the year here. Of course, 50 basis points cut in September, a 25 basis point cut in November and December, respectively. Nevertheless, the path forward now much shallower. Rates expected to be a full 100 plus basis points higher, closer to 4 than 3 by the end of the year, because inflation has proven stickier. Now, it's possible that the markets have overcooked this a little bit, because we can see that since mid-November, U.S. economic data has actually been cooling relative to forecasts. So maybe this adjustment has gone a little far. Maybe the markets are a little bit too hawkish, bonds a little bit too weak, rates and the dollar a little bit too high. But none of that changes the inflationary path. So although the markets might be wrong by a little, they're probably not wrong by a lot, and they're probably not wrong about the trend of adjustment here. So we're looking at structurally higher rates next year in the US than we thought even 3 months ago, 4 months ago, and by a significant margin. This, of course, represents a problem not just for the US, but for the world over. So we can see here in the latest numbers from the Bank of International Settlements, and 2022 is the last time they had an update. There'll be another one next year. They do this every 3 years. But these numbers don't change terribly, especially when the disparity is this large. Notice almost all global monetary transactions are settled in the US dollar. Those of you that have heard various chatter about the BRICS maybe coming up with an alternative should look at this sobering total here. This is all of the turnover moving through the BRICS, of which, as we can see very clearly here, most is China. And everything else, India or Russia or indeed some of the others are clearly a pittance comparatively. Here's South Africa right here. So, and of course, there's Brazil. So most of what's here is settled in dollars, and that's because the dollar is so liquid that it is sometimes cheaper, even when there is a bilateral deal to transact from one non-US dollar economy to another. It is cheaper sometimes to trade that currency for dollars and dollars into the third currency versus to do a bilateral deal, because the liquidity of the dollar is so abundant that that's the cheaper way of trading. So not surprisingly, almost all global commerce is settled ultimately in dollars. And what this means is that if the Fed gets a little bit more hawkish and rates don't come down by nearly as much and dollar credit is more expensive, then global credit costs are higher in general. And we can see that as we look at the way that an average of interest rates from the key economies in Europe and the Asia Pacific region, Germany, UK, Australia, Japan, the top four outside of the US, how their interest rates have moved in lockstep with the US 10-year, even as central banks in the UK and in Germany have cut. The Bank of Japan has hiked. The Bank of the central bank in Australia, the RBA, they've done nothing. But even as that has happened, the rise in U.S. yields has brought a rise in the average of the other four of the alternatives. And that just tells you how ubiquitous the dollar is in global trade. That, of course, sets up a very interesting situation for 2025, where the robust performance in the U.S. means higher rates in the U.S., but also higher rates on weak economies that are not seeing the boom that the U.S. is seeing. Moreover, since the world is dependent on a single point of failure, the U.S. economy's economic strength, it is certainly a point of interest that interest rates are set to be higher there, even just locally, because, of course, that would perhaps start to hold back U.S. growth, and to that extent, hold back global growth because there is no backup. So the risk to global economic performance is a significant thing to keep an eye on, and a significant risk for markets as the calendar turns to 2025. Moreover, the stock of global growth is huge by any stretch of the imagination at a time when interest rates are going to end up higher than expected, it would seem. We can see here the full breakdown from the IMF. We find that in debt to GDP terms, because of course debt is not scary in absolute, it is only scary if you can't afford it. And debt to GDP tells you how affordable is the debt, are you producing enough economic growth to service it? And of course, in the COVID years, we can see there's a massive surge for global debt as well as for the major economies, the emerging markets, the US and China. The change in global debt was significantly lower in the subsequent years because inflation was roaring and inflating that debt away relative to growth. Well, that seems to have stopped for the world in 2023, where public debt is starting to grow a bit. That's mainly powered by what's going on in the US, of course, and China, and to some extent, emerging markets. But we are now in a place where inflation has come down a lot, almost everywhere, from double digits or close to them, to levels that are much closer, if not quite at, central banks' targets in the sort of 1 to 3% range, depending where you look. And with that, the shaving away of debt relative to GDP. So the affordability improvement that we saw here and here and here and here is ostensibly over. If you were to find yourself in a global scenario where the US buckles under higher rates, where already weak economies outside of the US have to deal with those higher rates without the benefit of stronger growth, you start to see how a treacherous debt risk starts to emerge. This is made that much worse because this particular US tightening cycle has been unique since the modern era. This is a chart from The Economist going back to 1972. Very important look back period because that's right around when the modern financial system as we know it is born, with the uncoupling of gold and the US dollar and the dawn of the fiat era. So what we find here is that in every other tightening cycle, they're listed here, the outlays by non-financial firms, that is regular businesses, on credit increase when the Fed raises rates. That's, of course, exactly the idea. The Fed is looking to slow inflation, slow the economy, and so it's raising rates to increase how much firms are spending to borrow, to discourage them from borrowing, and cool the business cycle. The 2021 to 2023 rate cut cycle has not done that. And the reason it's not, the reason that actually credit outlays mysteriously are falling even as rates go up is because during the COVID years, everybody gorged on cheap credit. Well, that cheap credit comes due mainly next year and 2026, and at interest rates that are 200, 300, 400 times those that were incurred. If this happens at a time when GDP growth slows because rates are already high and going to be higher than previously anticipated, then of course debt affordability is that much scarier. Couple that with the most bullish disposition for risk sentiment that could be imagined. A survey here from the Conference Board showing in the US the percent of respondents expecting stock prices to be higher next year, off the charts. The allocation to equities has only been higher all the way back here at the start of the global financial crisis, and then back in the dot-com era. The allocation to cash has never been lower, looking all the way back to the second half of the 1990s. And so what we find here is tremendously robust risk appetite, which of course is clearly on display when we look at this performance. Now, given the risks, one has to wonder. Optimism is always highest at the peak. This is by definition the peak. But is this the peak? Or could optimism continue to build? It certainly could. But the way the table is set, one does have to wonder if indeed we've reached that peak or close to it, and if equities are in for a rude awakening next year as markets digest all of what's ahead. And that is macro money for today. As ever, we are here right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. It is a holiday-shortened week, but we will be back on Thursday after market closures around most of the world, and we'll have two shows for you next week as well around the New Year's holiday before we come back to regular scheduling. You can follow me here and, of course, opining on the platforms formerly known as Twitter, as well as now on Blue Sky at Ilya Spivak. Thanks for watching. Have a great holiday, whatever you happen to be celebrating. Macro Money will be back on Thursday to finish out the week.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to tastytrade. See how it pays to have friends? Terms and conditions apply. tastytrade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A Scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We're back. Tasty Crypto Show. I'm Ryan Grace. Of course, she's Shelly Van. Almost slipped up there, Shelly. Apologies. She's Shelly Van. It's like a tongue twister, you know. Tasty Crypto Show. It's Wednesday. We're getting through it. How you doing?
I'm doing really well. I'm excited.
Good.
Although I was just telling you off air that like I have that feeling that I'm forgetting something.
Oh no.
Forever. It's haunting me all day and it's just been getting worse. Normally it's like, oh yeah, it was just something stupid, like, but this is just a lurker feeling that I can't quite shake. So.
Do you have to get gas in your car before you drive home?
I mean, no.
Groceries?
I've run through all the like logical things. It's something, I think it's like a task.
Have you bought your crypto today?
I did buy some crypto.
Okay, okay. Check the box.
Yeah. Grumpy Mike is here. Hello. Dino in the house. Shout out to the chat. But yeah.
Hopefully more people show up soon.
Hopefully more people. Yeah. Say what's up.
Some of the gang is here.
Some of the gang. Do we have a question for the chat? What am I forgetting? That would be, oh, is this live now, Mom? Hi, Mom.
I don't have a question. Do you have a question?
What am I forgetting?
Okay, yeah, that is a good question.
Lovely.
Jose, what up?
What
Sorry.
up, Jose? No, that's why we're here. Let's see. Favorite? We've done all the like sweet things. What about savory? Like salty snacks. Do you have a favorite salty snack?
Can it be sweet and savory? Because I love chocolate-covered pretzels.
Ooh.
But if we're just going pretzels, you know those ones that I think it's like, it was probably a genius idea by the company. I can't remember what the brand is, but they're these honey mustard like pretzel pieces.
Nibs.
It's from the same company that makes the giant pretzels, but these must have been like the broken ones, and then they just mixed them up. And
Snyder's.
yeah, that's it, Snyder's. Yeah, that's my savory snack.
Okay. All right, that's
And
a good
Chex Mix, I like that too. I like all the snacks.
one. You are a child.
I am at heart. Yeah.
Popcorn will be the death of me.
Okay. Yeah.
All forms, cheesy.
You drench it in butter.
I do like some, buttery popcorn, but really it's cheese, the cheesy popcorn. Like I dedicate a hand to turning orange.
You have to, yeah.
This is
make
my
the
filthy-
sacrifice.
Yeah, like, okay, I just won't touch anything with this hand until this whole session is over. But yeah.
Well, let us know, chat. What is your favorite savory snack? And, they're starting to show up now. Love that blob. Laura's here. That's your mom, right?
That is my mom.
Osborne Graves. Ben.
Sub-Zero.
Hell yeah.
What's up, everybody?
So before we kick things off, Shelly, we've got to talk about your new show. You and Dan launched a show, kicked it off this morning. It was awesome.
Thank you.
If everybody missed it, is there an on-demand recording? Can you go back and watch, or do you just have to tune in again on Friday?
You can. It is replayable on X and YouTube. So we will be streaming to Facebook eventually, but I forgot that we don't have 100 followers yet because it's a brand new account. So everybody here, please go like Tasty Crypto on Facebook because we will be live streaming over there once we build out that account a little bit more. But yeah, we will be doing the bookends of the week, Mondays and Fridays in the morning. And that was so much fun this morning. That was our pilot episode. Little hiccups here and there, but we made it fun. It's all part of being live and running lots of giveaways.
Yeah, I was going to say, you guys are giving away money on the show.
We are.
And crypto.
We are.
And NFTs.
Yeah.
And other prizes.
Uh-huh. It's darn fun, a variety show. We're going to have some really cool guests that we've already got lined up, some founders in the space, some really cool projects, and we're going to do some real-time exploration. It's going to be awesome. I downloaded or updated OpenSea today. That was a trip. Did it live on air, so it was like anything can happen. But it was really cool.
It's been a while since you were on there with all of your collection.
It hasn't. This is actually pretty new for that platform. I don't know when it went live. It's only been in the last maybe couple of weeks. So yeah, and I got to use it today because I was transferring prizes from my wallet. So there's new features in there that are really cool.
So if you're watching the show, you can win your NFTs, and you have quite the collection, I understand.
Yeah, I could be proud. But there's a hint of embarrassment because it's a little excessive. But I'm proud of my collection, and I'm willing to share it with new friends.
I love it. Well, I think I got to catch a bit of the show this morning. It is awesome. I highly recommend it. Get over to our channel on X or follow us on X. Get over to our channel on Tasty Crypto on YouTube. And the next episode is on Friday morning.
Yeah.
Looking forward to it. Beans. With Shelly and Dan. Shelly Van and Dan. You're pulling double duty here today. What do you want to talk about first? We can go to the market, which honestly hasn't changed since 6 a.m. when we put together our market update. We've got a lot of great questions that we've been receiving in the Tasty Crypto support inbox. So if you're using Tasty Trade, you kind of have a broad, we can't help you with your account, but you have a big, broad kind of crypto question. We're happy to help out. If you have a question related to the Tasty Crypto app or just anything crypto related in general, hit us up. We've had a lot of questions recently about kind of the connection between Tasty Crypto and Tasty Trade. A few questions on the app. So we can go and do a bit of a demo day, I suppose, but leave it up to you, Shelly. Guide us. Where do you want to go first?
Let's get some price action. Even though it's not exciting, let's get that over with. We got to know.
Yeah, let's do it. Let's jump into our slides really quickly. Have our performance dashboard just to take a quick peek at this. A couple things maybe stand out. Also, this is the same dashboard that was in the morning email. So if you don't receive that on Wednesdays and you want to, sign up over at tastycrypto.com. That goes for the Saturday email we send out as well. But yeah, just looking at where we are here, I mean, it's been pretty bearish. It feels like, at least for the majority of this month as we're making it through. It's the 19th, but last few weeks, it's just been pretty poor. I don't know, boring, but just frustrating price action.
I've received some very concerned questions around Solana.
Okay.
From people deep in the trenches, that maybe this is their first season in the trenches. So that can be alarming for those of us that have been around in crypto for a while. It's like that roller coaster of the whee isn't so dramatic. We're kind of like, yeah, we're going down. This happens. It'll come back up. We're good. Just long game view. But for anybody holding a big bag of Solana, what is your advice? Or not advice. We don't give financial advice. But what is your opinion?
Yeah, in terms of how I think about it, I mean, I get where there's a lot of short-term selling pressure. A lot of what's happened that has probably made Solana interesting, and you look at some of the fundamental data that we've talked about that's been exciting around the fees that the chain is generating, the amount of new users, all of these meme coins or the tokens that have been launched on chain. That excitement has waned, and I think given what's happened recently with the Libra token, some of the other rugs, the blatant frauds that have kind of been launched, unfortunately, which is not specific to crypto when we think about fraud, but very quickly kind of bad actors emerge, and you've seen that on this platform. It's left a bad taste in people's mouth, and you've seen some selling pressure, but I think that's going to be short-lived in terms of we'll move past this. It's not like it's Solana crashing on its own. Everything has traded pretty poorly here. I think there's some macro drivers. It can't go up every day, obviously. You're looking for a bigger catalyst. Most of that is kind of priced in. There's a lot that's happening, not necessarily specific to Solana, but in crypto, when we look at institutional adoption, I think there's a lot of bullish drivers that are out there. But for many people, the time horizon is like overnight.
Yeah.
And so I get it. I don't think this is specific to Solana. And I think we also forget how volatile these things are until they go down. You experience more volatility actually on the upside, but it feels good. And you forget, how big those moves can be to the downside. So we look at Solana here at 170, 174, actually 167 if we have an updated price. It's kind of hanging out towards the bottom of a recent range, whether it holds on there or not. It is not trading very well. The other way that I would look at this is against ETH, against Bitcoin, and we can jump over to that in just a second. But yeah, you can clearly see here that it's been one of the relative underperformers against Bitcoin. But that said, not much has outperformed. Maybe bizarrely to me, Litecoin has outperformed, whispers of an ETF. Ripple, love it or hate it. I don't know what justifies the valuation, but that doesn't matter. That's been a fantastic outperformer. But Bitcoin Cash, Doge, ETH, ETH has been trading pretty poorly for a long time now, and we're starting to see that spill over into Solana. Bitcoin's held up okay, but I wouldn't be too worried about this long term. I don't think this is it for Solana.
Yeah. Jose loves Solana at this price.
There you go.
Sounds like he's buying.
Yeah, I've been buying some. I'm not putting everything I've got into it, but when you pull back to these levels and you look at something that was 280, 290 or so, we're about $100 lower than where we were just a few weeks ago. Maybe there's an attractive opportunity. Hopefully it goes back up. this stuff is, again, just very volatile. We forget how volatile it is until it goes down.
Mm-hmm.
So I don't know if that's helpful to anybody, but
I think it's reassuring.
well, what we've seen is, this has been breaking down, and we're getting these price momentum signals that we've gone from bullish to neutral on the weekly, and that's one step away from going to bearish. And when those things happen, and you can see it here with ETH, maybe less of a reason to buy it while it's kind of trending lower. Doesn't mean it's going to stay there, but that's just how we use these signals. So
We have a question, JMG 1001. What justifies the SOL valuation?
yeah, I think that, when you look at what's happening on Solana, what justifies any valuation here from a fundamental perspective, I would look at the fees or the revenue that's being generated on the chain, right? You have to pay a transaction fee to interact with the network to process the transaction. So if we see fees going up, it's going to be, pretty good representation of more users. Can that fee revenue be maintained if we're not seeing new meme tokens launching all the time? We'll see. But that's a use case that kind of popped up here recently. I don't think it's going to go away. There will be more use cases, but ultimately it's, what is happening on chain in terms of development activity. Does that lead to more utility, more use cases that then brings in more users that then supports us from a fundamental perspective in terms of revenue generation, if you think about it as a business?
Mm-hmm.
And when you look at it from that perspective, there's a lot of positive signs. Now, it doesn't mean that it's going to go up every single day, and we know that these things are wildly volatile. But if I'm looking at the fundamental picture, it looks pretty good.
Mm-hmm.
But at the same time, what matters today is the price, and the price action has been a bit disappointing. But just a month ago, we were $100 higher.
Right.
And maybe in another month, we could be $100 lower. That wouldn't be good. But my point is that these things can change in an instant.
Yeah.
So the one thing I will just kind of throw out there for anybody that's looking to kind of dig into some of this a bit more, DeFi Llama, Token Terminal, if you go to some of those dashboards, you can get a good sense of what we're talking about. You can see the fees. You can see TVL on Solana. You can see the amount of stablecoin trading volumes and activity on the chain. And if those things are going up and to the right, regardless of the price, I think it to some extent justifies kind of the future outlook.
Very good. So we have 10 minutes left.
Oh, wow.
We have to get to the demo, but we do have one quick question from Demi Moonbeam. What's the minimum amount of Solana you need to participate in liquidity pools?
I have actually never created any pools on Solana. You can do that through Radium or Jupiter. Mm-hmm. Given that, I think the only thing that really holds anybody back is just the transaction fees, or with ETH, the gas fees. I look at Solana, though it's an L1, I mean, the economics in terms of the fees going to be similar to an L2. So I don't know. I mean, $100 is probably the minimum, or $50 is kind of an arbitrary amount, but I don't think you need much. Whereas if I'm going to do something on ETH, and it's definitely changed, but it's hard to create a liquidity pool even with $1,000 if it costs $50 to deploy the pool,
right?
Versus the fees you're going to generate off of that that capital. So with Solana, I don't know, $10 maybe, but your return in dollar terms isn't going to be that large.
Right. All right.
So hopefully that answers the question.
My partner in crime, Dan, is here, and he's saying join the Discord. Yes, join the Tasty Crypto Discord, please. That is where we are reactivating the Tasty fam, the crypto fam. Everybody's welcome.
I'm excited about that.
It's going to be really fun.
Yeah, we can finally support it, hopefully foster community in there. I know there were a lot of people early on that were showing up, and I apologize, we weren't at the same time, but we're bringing it back.
Bringing it back.
Dan's leading the charge, and you guys are doing a fantastic job of that, so I'm excited.
So what else do we have here? Expected moves, and then we can dive into platform?
Yeah, let's jump over to the Tasty Crypto app in just a second. But before we do that, let's just quickly take a look at expected moves here. I think this is good just to set expectations for the week, given where spot price is and volatility. If you've been following the show, these expected moves have come in quite a bit. So previously, and really around these same spot prices, we were closer to about an $8,000 expected weekly move for Bitcoin. And that's just a one standard deviation move. Expectation is that you're going to trade within that range for 2/3 of the time, basically. ETH has been a bit sticky at 250, but the tighter range here with Bitcoin is just a function of volatility absolutely collapsing. And that is something to take note of. Implied vol in here is actually, the updated vol is 49%. So we ran the numbers earlier at 51%. Realized is 33 on a 1 month basis if we annualize it. And when you rank that, and what we're doing there is just looking at, okay, the implied volatility of 51%, where is that number relative to all the levels it's traded at over a 3 month period, 6 month period, or a year? It's close to zero. What that means then is that these levels of implied volatility, option premium, what traders expect in terms of movement, are at some of the lowest levels on the year, certainly some of the lowest levels in the last 3 months, which is a function of just how wildly volatile it was with the election and everything that's happened in the past couple of months. So you can't read into that shorter time period too much, but volatility has come in a bit. Will it go back up? Maybe. It can go a lot lower. Just know that characteristically, this is pretty low for what we typically see with Bitcoin.
Mm-hmm.
So tighter ranges when volatility comes down, volatility widens, you're going to get bigger ranges.
Makes sense. Makes sense.
So yeah, that's where we're at with the expected moves. A little bit of the performance dashboard, but really, again, it's been pretty boring out there. Frustrating for both the bulls and I guess even more so recently, if you're short the bears, it's not really going down either when we look at Bitcoin.
Yeah. Grumpy Mike, more users, as in some application for the coin generating the fees, or is it just more speculative buy-sell generating fees?
I would look at it as more users on chain. Are more users participating in the Solana ecosystem, on the Solana network, however you want to think about it, right? You have a blockchain that decentralized applications can run on top of. More users of those applications is synonymous with more users of that chain. Mm-hmm. And I think generally speaking, this is true of everything, right? If more people use Bitcoin, there's increased demand, there's limited supply. More people use ETH, Solana, et cetera, it should have a positive impact on the price. It's not necessarily going to be one for one, but if there's increased demand for something and you need Solana to pay transactions, it's part of the ecosystem, trading pairs are based in it, you're going to likely see the price go up.
Mm-hmm.
If people are shunning Solana because of something that's happened on chain recently, well, price is going to go down. But I think, again, that's temporary. The one other thing I would add to that is that there is a lot that's going on in the ETF space where it is seemingly likely that we're going to get a Solana ETF sooner than later. It seems as if we will get for sure a decision on the Solana ETFs that are in review right now. Hopefully they're approved, but that is another potential catalyst. So again, I wouldn't read too much into just the short-term volatility here.
Yeah.
I'm not of the view that this was it for Solana and it's going back to FTX prices. This is something that has survived the very worst of what we've seen thus far in crypto.
Okay, pressure's on. 4 minute,
I don't think we can do it. I think we're going to have to kick it to another day. I guess we can show and talk about a couple things in the app. Let's do that.
Yeah.
So if we can throw the app up on the screen, and I think it's up there, but let me just double check. Yes, beautiful. So we've got the Tasty Crypto app here on the screen. This is for iOS and Android. And the one thing that I do want to answer, Shelly, is just to show everybody how you can connect this to your Tasty Trade account. Once you've connected it to your Tasty Trade account, you can transfer crypto that you have with Tasty Trade or with Zero Hash to the wallet address that you control here with the application. The new version that's coming out will also allow you to buy it right here in the app. Now, that will still be in your Tasty Trade account, but you can do it all with one interface, one platform. So that's pretty cool in my opinion.
Super swanky.
Here's how you do it. So this is already connected, but all you need to do, you have the Tasty Crypto app. This is on chain. This is your self-custody wallet. You want to connect it to your Tasty Trade account. This is assuming you've got crypto trading enabled, you've got crypto transfers enabled. All you need to do is you go to the menu and you're going to go to Tasty Trade. And I have previously logged in. So now I'm active. When I click on this, well, it's going to tell me that I'm already logged in. So I'm in here now. And now that I have the connection, if I go to click on add and I click on Tasty Trade, You can see the balances that you have here. It's going to take a second to load up. I know that this one at the bottom is the one that I have the crypto trading enabled on, and also the transfers. And so this is going to give me the ability to withdraw crypto. And the two assets that I hold with Tasty Trade right now that I can bring over to the wallet, so you can move over Bitcoin, ETH, and Solana. The wallet itself doesn't yet support Litecoin, Bitcoin Cash, or Doge, or Ripple, all separate chains, things that we can add. Primarily an Ethereum-based wallet. We do have Solana. You got L2s on here like Base and Optimism Arbitrum, and of course, Bitcoin. But what I hold right now at Tasty Trade is just ETH and Solana, so a little bit of each one here, not quite an ETH. If I want to move this over, I just click on it, and let's say that I want to transfer $5. So I can put in, whoops, that's 5 in ETH, but let's go 0.0005. So not quite $5, but $1.36 for this purpose. Let's go a little bit more there. So there we go, $2, review transfer. And actually, you know what? I can't open it up on this because I have my other authenticator on my phone, but we can walk through what this would do. You would go in and you have to have 2FA, so two-factor authentication turned on in your account for security purposes. Type that code in. If I had the ability to do that here right on the show, not prepared, apologies. But once I put that code in, it would take me to another screen, and then you just confirm the transaction, and everything else is going to happen under the hood, and your crypto will be withdrawn from Tasty Trade to the address that you control here, and you'll see that balance eventually after that occurs. If I get all the way back to the home screen here, you'll see that Ethereum balance then update. You can see that in your activity. You can then trade that for other tokens.
Yeah, you're on Party Island.
You are on Party Island once you move that ETH over. Yeah. And so there's a lot that we're working to improve the experience, build better bridges to Party Island. But today, when you're logged into your brokerage account with Tasty Trade, you have crypto enabled, you got the 2FA turned on, you got the transfers taken care of. But you've gone through that process, and you only really have to do that once. But once you've done that, then you're free to move crypto back and forth, use the exchange functionality that exists via Tasty Trade and Zero Hash. But when you bring that crypto on chain, you can stake it via Lido. You can create a liquidity pool, Uniswap, or directly in the app, you can swap it. And so if anyone isn't familiar with how this works, and this is across multiple blockchains too, it's not just on Ethereum, but you can see here some of the different token balances that I have. Let's say that on the Base network, jumping from L1 to L2, I have $100 or so in USDC on Base. If I even want to buy more ETH on Base or another token, Virtuals Protocol, for example, one of the AI launch pads that we've talked about, you can do all of that right here directly in the wallet. So if I wanted to swap all $110, I'm going to end up with a little bit less. There's a little bit of slippage, there's a little bit of a fee in here, but this is a way that you can swap, and this is all happening directly on chain, which is cool. This is outside of the brokerage ecosystem. If you want to move it back into your brokerage account and then subsequently back into your bank account, you just have to deposit it back at Tasty Trade. But once you move it out, you can do whatever you want. Your keys, your crypto, right?
That's right.
Party Island.
Party Island.
Wasn't quite a full demo, but I think we covered a couple things. And again, that's how you would go in and just connect to Tasty Trade within the Tasty Crypto wallet application. There's a lot more coming soon.
So much more. We almost spilled some very big beans on the show this morning.
Oh, no.
Yeah. So
you're letting the secrets out, huh? That's okay.
It's the point. Beans.
Yeah.
Spill them.
What did you, I mean, I guess.
Well, yeah, I can't really tell you, but.
New features, new things coming to the, what were you alluding to? Okay.
Yeah. Tasty traders specifically will be very excited.
Ah, gotcha. Okay. I think I know what you're talking about. Yeah. Shelly and Dan are cooking up some really cool stuff in the cave. We should get that out, I would imagine, in the next couple of weeks.
Yeah.
So some cool things there. Can't really speak to it other than saying we're doing cool things. But on the wallet app side, there should be a new update that goes to the iOS and Android stores this week, and then next week, presumably, it's approved. It's available for download. That'll have the ability to buy crypto. Some really nice improvements. I know we've had a few bug reports recently, so thank you everyone for that. We've got the fixes in place, and nice, updates to the swap, and then that watch list feature that's got a really cool new news component. So we'll do a more in-depth demo once that's available.
Yeah.
But I think we've run out of time.
We have. But that was a good speed round. Well done.
Yeah. Sorry we spent so much time just talking about the market not moving.
That's fun stuff.
Next time. Well, Shelly, as always, thank you for coming on the show. And again, if you have not checked out Beans, get over to the Tasty Crypto YouTube channel, subscribe to the channel. The show is every Monday and Friday, 8:30 a.m.?
9 a.m.
9 a.m.
Central.
9 a.m. Central Time. It's an awesome show. It's a lot better than whatever I'm doing here with this. So make sure you check it out. But I will be back next Wednesday, so I'll be off on Monday. Shelly will be back with Beans on Friday. Until then, I'm Ryan.
I'm Shelly.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Calling all traders.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was.